What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we're going to take a peek over here at the Bitcoin price chart, but I'm going to try to tie in multiple pictures here on what's going on with the altcoin market, along with still waiting for the expansion of the United States stock market, which has not happened yet, along with mixing in gold in there. But if you caught the video that I put out 2 days ago, we were talking about breadth over here in the altcoin market, and that I had put together an indicator with about 30 different cryptos in it and tried to create this indicator to be more of an on-off switch rather than like a MACD that kind of starts to gradually roll over or cross, or stochastic, same kind of story, but more of kind of aggressive when certain metrics are being met. And essentially, if a certain amount of time elapses and 70% of those coins are in an uptrend, it flips on. And the opposite is true for it to flip off. And what we've seen on the daily time frame, ever since the 702 retracement got hit on March 14th, the breadth just died in the cryptocurrency market until really just the last week when suddenly things have started to open up over here. So there's actually some optimistic behavioral changes that are happening in the cryptocurrency market right now on this move, which doesn't look all that impressive compared to what we've already seen. But under the hood, there's been bigger moves. But at the same time, we're actually seeing something start to behaviorally change over here in the safety trade dominance, which we've talked about for a long time, that in 2018, 19, and 20, the safety trade was to go to Bitcoin. That's what this was over in here, where Bitcoin really came all the way back up. But this time around, with the acceptance of the stablecoin market to seek safety and even Ethereum being a safety-seeking asset, we really watch this market dynamic change of where people go to seek safety. We've been staring at this for a long time, but here in these last couple of days, not only has this breadth indicator indicating 70% have uptrended started to trigger, but there's actually been a little bit of a shift down here on the safety trade dominance finally. And we've seen this show up in here on the strength indicators. You can see the MACD has crossed on the weekly time frame. You can see the stochastic RSI has fallen off of a cliff. And as I posted yesterday on Twitter before we got that little break, hey, look, we're already seeing that breakdown happen over here in the relative strength index. So this is a good sign. This is what you want to see if you're an altcoiner. We saw this same kind of behavior happen back in 2018 through 2020, where we came back to the 702 retracement. And that's your crypto bull run. Here we are with the same structure over here, right in here. Really, it's just been these exact same things all happening in here to get to this point now. And zooming in a little bit closer, you can see after hitting that 702 twice, now here we go, finally starting to drift a little bit below the 618 retracement here on the daily time frame. So yesterday was the first close below. Today we'll see how things go to see if we're going to catch any momentum or just kind of go at a really slow speed down in here. But it's nice to see confluence of this actually happening here with this indicator in here, because this is supposed to be measuring breadth that is happening throughout the whole market, where this isn't just an isolated run happening with a couple of altcoins or happening with Bitcoin or happening with just Ethereum, but that this is broad-based. And that's what this is too, right? This is a reflection of how the whole market is doing versus the stablecoin market, Bitcoin and Ethereum. And if this is a broad-based rally, and that after 6 months, we finally have something starting to wake up. So we'll touch base on Bitcoin really quick. I want to tie in gold to the whole picture because there's been an inverse relationship between the two. It's unequivocal. Gold broke from its high here at the beginning of March. Crypto market topped less than 2 weeks later, hitting the 702. Gold's been marching. Crypto's been heading down. We talked a lot about that at that time. I wrote about that in the newsletter on February 28th, that if gold starts breaking out, it may give the clue that the 702 is going to give a problem this time around with the lack of breadth and expansion. But now, as we're starting to get near targets of what measured moves would be based on past ranges or even based on past waves, we're there. And can we see things finally start to turn the corner after just having 6 months and a 58% crash since the euphoria from back in March? Peter Brandt had posted over there on Twitter last night that gold is now reaching its target zone. The advanced in gold is now reaching the target zone established by the March of 2024 breakout. It's time to take some money off the table. This is exactly what we've been talking about. It's what was highlighted in Wednesday's video, that the measured move of the breakout that happened back in March, which is when the crypto market topped, it's now reached full extension of 2 separate ranges. Whether we're looking at this full range as like an A, B, C, or even if we're just looking at this range, that the measured move of how far it has gone has reached what a target zone would be for a breakout. That in expansions of gold, that has not been good for the cryptocurrency market. However, in events where gold tops, it's been very positive for the cryptocurrency market, where it has soared into moments like that. To look at it from that perspective, that's how the bull run kicked off. But in actual expansions, they've been incredibly inverse. And at the same time, like we just keep seeing, there has been no expansion in the equity market. Like we're talking about over there with looking at breadth and saying, hey, this thing triggers if 70% of assets are trending, right? The stock market breadth has been 11%. 11. Something we've never seen in 2013, 2017, or 2021. Every time the Dow broke out, the Russell went with it, breadth opened up. This is the first time this hasn't happened, right? Which it's also the first time that after a prolonged bear, the altcoin market gets back to the 702 and rejects, right? And looking at it through that lens of being like, well, you know what? This time is different. Something is happening here. Gold is breaking out. There's no breadth. Something's at play. But now we're at a point where we've pulled back to the preliminary support for the cryptocurrency market. We're seeing breadth signs start to wake up, whether it's an indicator I built and we just throw that out the window and say that doesn't matter, or we look at it through this lens and say, hey, things are starting to make somewhat of a shift in here, and we're seeing the weakness really show up in here, whether we're looking at the daily time frame or we're looking at the weekly time frame in here. We're also seeing gold get up to what extensions could be. Now that we're getting there, maybe it's time to start looking at it through a different lens. And really, that's been the messaging for the last 2 weeks. Going back through those videos from back in November, refreshing the brain of what it was like to try to remove a lot of the noise of what's been going on in here. As we went through Wyckoff accumulation, slammed into the 702 retracement, and then pulled back to preliminary support. This is a normal technical structure that has happened in the market that was not ready for expansion, not ready for a bull market. And that if this whole broader thing is an actual bull market happening in here, that it's typical to go back to those retracements and then build a new range and then to extend that range for the upper bound target. So, we're trying to look at this through a positive light. I even concluded the last newsletter that was put out 2 weeks ago saying I was going to buy the market. I did do that on September 19th. The newsletter discussing that will be out on Monday. I don't think I played this range perfectly, but played it to the best that I could, trying to sell near the retracement levels. Took a stab at buying that April liquidation that came out, then having all of my stops get hit, then making my entries right in there. So with the capital that I intended to preserve, it got to avoid a 35% drop. It got to make about 4% on there. I wouldn't say that's as high as 11. It was something like 4 to 5% on average, and then got to avoid that fall right in there. But obviously we've been ranging. This is now where the bulk of my entries have been made. And now I've taken a second swoop at it on another set of entries down in here. And so I'm like max allocated that I'm willing to get to. There is no other, hey, I'm going to add a whole lot more than what I have right now. I'm definitely as maxed as I'm comfortable being. But it's a lot of the stuff that we talk about, going through developerreport.com, going through Santiment, going through DeFi Llama, looking at total value locked, where are the users at, picking those ecosystems that are actually seeing growth happening in there, or things that have had incredibly shallow percentage drawdowns where buyers have stepped in to scoop them up. But the thing that makes me real optimistic about what we're seeing right now is that, while we're looking for something like this, we're looking for this thing to wake up and get moving in here. We've got the indicator suggesting it is. I talked about this on the video on Wednesday, is that when we're on the 1 day time frame, so where every candle represents 1 day worth of price action, and if this breadth, 70% breadth indicator triggers itself, it doesn't necessarily mean that things can get raging. It actually did it back in here, back in July of 2023. And we know things were okay, but nothing crazy started happening there in July of 2023. We can look here on total 3 as well and see when that triggered right there. But what we talked about on the video on Wednesday is what happens if it triggers on the 2 day time frame. Is that even there, where that 1 day triggering happened, the 2 day didn't trigger. The 2 day didn't get convinced of it. The 2 day trigger did go off here on October 28th and into October 30th. Now reflect back on everything. That's where everything began, October 28th and October 30th. Look over here on the Russell 2000. Where's October 28th and October 30th? Right there, literally right there. Russell goes, and what happens over here? The breadth opens in the cryptocurrency market. And this is on the 2-day time frame, right? So the 1 day doesn't get tricked back in here to believe that it's actually going to be a big move. But over here in October, and in particular, October 30th, the day the Russell reverses, it does trigger on the 2-day time frame. So when I put out that video on Wednesday, it was kind of being like, we have the 1 day, it can be a trick. We've seen it be a trick before that things weren't ready to go. So the thing we need to pay attention to is the 2-day to see if the 2-day will go. Here's that clip from Wednesday. So one thing I'll be looking for this to confirm itself, knowing that on the daily time frame, we can get false signals to show up in here that things are going to really get moving quickly. However, many times it does flash it correctly. But when we move further out, charts like the 2-day chart tend to give less of a false signal happening in here. First, you get the 1 day to flash it. Then we look for the 2-day to start waking up and flashing it. Well, guess what? There's the 2-day. It just started. And well, the last time that happened was right here. And here we are in pre-market in just these last few minutes. Suddenly there's been some movement up here in the Russell. So we'll see how today goes. But things are starting to show some positive signs happening here throughout the market, especially when it comes to breadth, which even, the safety trade dominance is really kind of just a reflection of breadth. It's a reflection of, is the market getting consolidated into specific places like Tether or USDC or Ethereum and Bitcoin? That's a poor breadth in a market. And when something like this falls, it's showing that the breadth is opening. And while on the surface, this just doesn't really look like much, we're just getting corroborating signals happening throughout the market to add confluence to that. There seems to be something there. And I do just find it absolutely amazing to see that this signal gets thrown on the 2-day on October 30th, literally the day after the bottom of the Russell and the reversal, which the Russell is really kind of the index of breadth of the entire stock market, and that the measurement of the breadth within the cryptocurrency market goes wide open, boom, right there. So if your interest isn't piqued just a little bit by seeing that happen right there, I could certainly tell you mine is, especially with the confluence of that starting to show up in there and that weakness break happening finally over in the safety trade dominance. So coming weeks, we'll be looking at things like on ranges being able to be built. And I would love for this thing to go in a straight line up. It's just highly unlikely that it will. Ranges can take shapes of several different forms in which they can be like that and then just get back to retraces, and then we have to bounce around for a while, or we can do the ABC style structure in here to have to kind of waddle around for a while before things can get going. So we'll see how this week ends, and then we'll take a closer look at it moving forward. I think really just kind of the focus of what we have seen this week has seen the wake up of breadth happen over here in the cryptocurrency market. And then we get to finish off the week with the 2-day triggering, just like we talked about on Wednesday, that it's like we kind of need to see that. Guess what? We get to finish our week off with it. So there's still like a day and a half left for this to close. I'm kind of making the assumption that it will stay like that, that the market won't completely rip and destroy itself over the next 36 hours. But obviously, there's been enough action to occur that after the course of 6 months, finally, we're seeing life. And well, wouldn't it just be absolutely amazing if we can see something between crypto and equities happen again? But all right, that's going to be it for this one, guys. A pretty good week out there. I mean, just nothing but green, 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 green all week. So people should be feeling pretty good from that. Sentiment on Twitter doesn't seem to be there. There's no euphoria to be found out there. It's pretty tame. Bull posting doesn't really get much of a reaction out there these days, which is a good sign. It's a good sign. It's that euphoria that's always real scary. But hey, we'll take a positive week, and we'll take some positive indicator flips too. So we'll check in on it again next week, and then keep your eyes out for the newsletter posted on Monday. Normally when I'm writing these things up, they're like 20 to 30 pages long. I'm already on page 81 of this next one. So it's a long one, but it is data packed. So I'm excited for this one. That'll be released on Monday morning, and we'll do the thing and hopefully have a positive week heading into some of these indicators printing themselves more permanently. But on that note, guys, I'm going to wrap it up. You can check out the newsletter over here at blockchainbacker.substack.com. You can, of course, check out bcbacker.com with over 40 videos and 11 hours of content teaching you how to set up your own charts and indicators within TradingView and CoinTrader Pro. There, of course, are links in the description of this video to bcbacker.com and to the newsletter at blockchainbacker.substack.com. Otherwise, I hope that you have a wonderful weekend. Hopefully the weather is cooling down and the fall is nice. Otherwise, I'll catch you guys all on Monday. That's it. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.